think it is time to kick off. Hi guys, good evening and welcome. My name's Andrew Barnett. I'll be your host tonight and looking after you through our presentation on behalf of Mark Holterman and the entire Trading Mastery team. Welcome into our conference room this Monday evening. It's the 9th of November. It's just gone 7:30 Sydney time and Melbourne time, 6:30 in Queensland, and a little earlier in the Western States. And we are about to get underway. So if you haven't grabbed a pen and paper, please make sure you do so. Let's make sure we get plenty of content to you throughout the course of the next little while. Okay, so as I said, my name's Andrew. I'm going to be your host tonight. I was just having dinner with my wife a little earlier, and we were discussing, the trading journey that I've been on for the last 21 years it is now. And the fact that when I first started, a couple of decades ago, I knew very little. I was coming out of a background that I'll share with you tonight that had nothing to do with investing and trading. And I really was desperate because it was around the dot-com bubble. I could see so many people making a lot of money investing in internet startup businesses. And I was really desperate to get involved in that. And I was finishing a particular career that we'll talk about later on. And I really need someone to reach out and hold me by the hand and share with me the right way to invest and navigate through the forest of investing to get to the other side. And I was very fortunate that I had some very successful investors and traders do that. And I'll share with you tonight my journey and the way in which that I've been able to build the strategy and the system. But really tonight, for those of you that I haven't met before, and this is the first time we're meeting, and perhaps it might be the second or third time we're meeting, my aim these days today, after doing this successfully for 21 years, becoming very financially independent, and I'll share all about the different things I've been doing over the last 10 years or so, but really my role today is not only to invest my own money into the markets, but stick my hand out and help those folks that do want to build sustainable, meaningful returns on investment and show them how to do it the right way, show them how to do it successfully, without all the hype, without all the jargon. I've been doing this now, as I said, for a number of years, but I also appreciate the number of people that are out there telling you that they can help you make money. And really, at the end of the day, it can be an empty promise. I'm going to share with you tonight trading statements of my clients. I'm going to share with you tonight the cold, hard returns on investment that we have generated this year, last year, what our clients are making right now. So as you can see for yourself that no matter what your experience level, no matter what your income, where you are in life, whether you're still fully employed, whether you're working towards retirement, or maybe you are in retirement, that what I'm going to share with you is a realistic, genuine way to build higher returns, more stable returns, more meaningful returns on investment. So in your latter years of your life, in your 40s, 50s, 60s, 70s, and later, you can be content. You don't have to downsize your house. You don't have to drive an Uber. Whilst there's nothing wrong with doing those things, it's really not what a lot of people do when they're looking at their golden years. I'm 51. I'll share with you my family story tonight, so as you can appreciate that I'm not any different to anybody else. But what I am able to do through my experience with investment bank and hedge fund traders is show you a strategy and a system that is going to stand the test of time, and it is going to work because it has continued to work for the last 100 years, and it will continue to work in the next 100 years in your investment lifetime. So let's get started. Let's get underway. Now, of course, we are going to be talking tonight about investing in some wonderful businesses. And of course, investing and trading involves a level of risk as well as the opportunity for some profit. I am licensed with the Australian Securities and Investment Commission to share the content that I'm going to be sharing with you tonight. But I must stress that if I do specifically talk about a company that we're investing in or a company tonight, it's not a personal recommendation to you. I don't know your individual financial circumstances, and therefore the content tonight in that respect is general content only. So, all right, so the boring stuff out of the way, let's get to the exciting stuff and what you're going to learn and the content for tonight. At the end of the day, it's about helping you improve your investment returns. You wouldn't be here otherwise. But the way in which that we do that as professional investors, private professional investors, is that we ride the coattails of smart money. We ride the coattails of significant waves of money that comes into certain industries and certain companies. I'm going to share with you tonight a framework. I'm going to show you tonight the framework of successful investing that stands the test of time and will give you the opportunity to generate really meaningful returns, substantially higher than what you're getting right now in a managed fund, a super fund, giving your money to a broker or a financial planner. And I'm going to explain for you tonight why it is that if you are giving your money to other people, if you are leaving your money in a super fund or a managed fund, why it is that you will never actually make anything more than average. In fact, you'll make below average every year for the rest of your life. It will never get any better than average. Even though many people hope it does, it never does. And the only way to achieve results that are meaningful, sustainable, and to provide that contentment and happiness for you is to do it yourself. But the problem is, how do you do that? If you were to go and attempt what I'm going to share with you tonight on your own, the probability is you won't do very well. In fact, many people will fail. I'm going to share with you how to manage risk successfully, how to build a portfolio, how to structure a portfolio, how to have that portfolio apportioned correctly for you as an individual investor. You see, when you give your money to somebody else, it's generally pooled with everybody. So when you're doing the same as what everybody else is doing, you're always going to get average. The reason why the clients you were listening to earlier in the video and the ones I'll share with you tonight are doing so well is because they're investing in individual businesses that meet the 8-step process that we use here at Trading Mastery. And I'm going to walk you through that 8-step process tonight. In fact, in the next 30 minutes, I'm going to actually walk you through a number of companies and share with you 3 steps in our 8-step process that will really help you appreciate the difference between what we do as to what others might try and do on their own. How to secure your financial future, but not just for the next 6 to 12 months to 2 years as we come out of the pandemic. And I'll explain why this is such an important time right now in November 2021, because there are some real game-changing things happening with respect to the virus, with respect to treatments, with respect to vaccines that are going to mean that the global economic output is going to really accelerate in the next 12 months to 2 years. And there are certain companies, certain industries that you want to have your money in. We are investing in them now. We've already invested in them for the last 12 months and did exceptionally well, and it won't change that much. That's the good news. But you really do need to get started now and not wait until the pandemic is officially over in 6 months' time and then start to think about maybe I'll put some money into the market because it will simply be too late. The train has left the station. I often hear from folks generally 3 things. The first one is, I need more money to retire. I don't feel like I've got enough. I don't think my super has been strong enough. I don't think my managed fund has got enough. Maybe I've got to work for a few more years, but I need more money to retire. The next one is, I never seem to get ahead. I go from one investment vehicle to another one. I try this and I try that, and I give my money to somebody else here, and it never seems to work out for me. You know, if this is resonating with you and perhaps one of these is your challenges, then you're going to really enjoy tonight, because those of you that are tired of low returns and you think, well, surely this year I'll get a better return, and it just never really happens. You know, this is very common for most Australians. I mean, I was watching the ABC 7:30 report last year, and Peter Costello and Paul Keating were on there together, and they were talking about how superannuation that they were a big part of in the 80s and 90s has really failed. Most Australians won't have enough superannuation. They will still have the pension, and unfortunately they'll have to downsize homes and do all the things that we don't want to do. And of course, they were talking to the 7:30 report because the amount of money that has been sucked out of the superannuation system during the pandemic so people can survive. And what that's going to do, the knock-on effect that is going to have on people's income opportunities at the end of the day in 5, 10, 20 years is just going to be huge. So, you know, our clients, Juanita Pereira, Ricky Sheen, on the screen here, I'm going to share with you a number of our clients tonight, their statements, how they trade, how much money they're making, and they've given me permission to share this information with you. Juanita's been a client of ours for about a year. She's over $60,000 in profit. She's now retired after finishing up at Telstra, unfortunately made redundant. She's now investing full-time as a trading mastery client. Ricky Sheen, they're changing my financial future. I can change your financial future for the better, but I can't do it in 5 minutes. This is not a get-rich-quick opportunity. It's not something that I can turn your life around in the next 5 or 10 minutes. But as Jeanette Gower mentioned in the video in the lead up to the presentation tonight, her experience with us has been a positive one, extremely positive. In fact, last year she made 43% return on investment in 2020. And recently she just, not so long ago, sent me an email saying she's now, her portfolio is at 181,000, up $60,000 since she started with us, and she's now up over 76%. Now that was back a number of months ago in July. She would be up probably closer to around $200,000 value of her portfolio, given the fact that the companies we invest in and we buy, their share prices have continued to rally very strongly. And I'll show you a number of statements tonight to talk about and share with you specific numbers of what our clients are achieving. Now, I want to talk now about the content and particularly the reason why we invest in certain businesses, because of course, most folks joining us tonight are in Australia. Some of you may be international, but most Australian investors are very au fait. They're very familiar with investing locally here in Australia, looking at potentially ASX listed companies. And I want to share with you tonight the reason why, if you were to continue to do that, the probability is you're going to be very disappointed with your returns over a long period of time. For example, in 2021, the S&P 500 in the United States, from the 1st of January to the November the 8th, has risen 25.15%. 25% it's risen this year. And last year it rose about 16%. The Australian share market, the ASX 200, is only up 9.95%. And last year it wasn't up much more than that. And there's a very valid reason why the US market and the companies that are listed on the US market continue to outperform the mining and energy and the banking businesses that make up the vast majority, close to 50% of the Australian stock market. We are here in Australia very much a one-trick pony with respect to our exports, with respect to our economy, with respect to the share market, the businesses listed on the share market. Just look up the ASX 200 on Google and just go through and you'll read all about the businesses: petroleum, energy, mining. It's close to banking. It's close to 50%. Whereas the United States market is a significantly larger, more diverse market of companies. And there's a phrase in financial markets, it's not a stock market, it's a market of companies. And what we invest in is wonderful companies, businesses that can grow their earnings and grow their revenue globally. And when you only invest in companies that are just in a very small economy like Australia, 26 million people, then the opportunity is very limited. Extremely limited. In fact, many of the world's biggest and most successful investors, Warren Buffett, David Tepper, Sir John Templeton, Monish Paprai, a lot of these household names, Peter Lynch, they've never invested in Australian businesses because they generally don't have the same number of global growth potentials with respect to those companies as that are listed on US markets. And once again, this year, it's proving that. And when I share with you here, I just grabbed this from my account, our company account earlier today. Our Trading Mastery portfolio that we share incidentally with every client, they get everything. They get every company, they get every position, they get the position sizing, they get the percentage of the positions. They understand everything when I buy and sell. It's up 46.97% from the 1st of January. That's our portfolio. And I'm going to show you the companies that are in it in just a moment. If you were to give your money to a super fund or a managed fund, they're going to put it into a diversified mix of companies, probably 100 businesses. We own about 15 or 16. Most managed funds own 100 or more. And you're always going to get average, and the ASX 200 is up 9.95%. That's never going to see you generate enough money to retire early, retire with more contentment, and all the things that you really want to achieve. But our portfolio is up 46.97%. And that's just not a once off. I mean, last year we made 56% return on investment. And when you give consideration to the fact that the average best 10 MySuper products produced by Rainmaker Information just published recently, for the last 5 years, the average super fund in Australia has averaged 8.3%. When you take off inflation of a couple of percent, 2.5%, then the real return on investment is extremely poor. And unfortunately, this is the reason why most Australians will unfortunately have to work for longer. They won't have that level of income in retirement that they once dreamed about. And unfortunately, nothing's probably going to change until they step up and start to do it themselves. The sad reality is that the funds management industry and the financial planning industry is not built for the clients. It's built for themselves. Essentially, the financial planning and funds management industry, 89%, call it 90% of these active money managers who are taking your money, investing it to get you a return on investment, they're not even keeping up with the ASX 200. So I said before, the ASX 200 in Australia is up 9.95%. Your super fund would not be up 9.95% this year. Your managed fund would not be up 9.95%. It will be less. They don't even keep up with the index, let alone beat it like mine, up over 46%. So their aim is to raise capital and charge fees. In fact, the Australian financial management industry in Australia generates over $35 billion in fees every year. That's more than it costs for average Australian to collectively to turn the lights on, electricity. They charge in fees and they underperform the index. It's the only industry that I know of that get paid billions and billions of dollars to underperform. So that's like contracting someone to build your house for a set fee and they come and do a poor job and you still got to pay them. And with all the resources at their fingertips, they still can't get you a decent return. The only way to do it, guys, is to do it yourself. But as I said at the start of this presentation, the problem with that is that most Australians today will get caught up in some sort of leveraged scheme, some sort of derivative market, somebody waving a flag saying, look at me, I'll show you how to make lots of money. They'll get enticed to doing something such as 5-to-1 leverage, investing in Bitcoin, investing in currencies or something like that, and they'll lose their money. And I know this because I've been a broker, I've worked at a broking desk, and I understand who wins and I understand who loses. And I've made a lot of money myself in financial markets, and I understand the system of how it works. Now, my portfolio from the April the 14th, 2020, when we started the portfolio here at Trading Mastery, to today, the companies we own are on the screen. The return on investment for each company that we have invested in is on the screen. Apple, 113%, Microsoft, 79%, Google, 126%, Alphabet is the parent company, Amazon, 41%, Bank of America, 95%, Berkshire Hathaway, Warren Buffett's business, just under 70%, Coca-Cola, 30%, Wells Fargo, one of the biggest banks in the United States, 98%, Costco, 63%, Home Depot, the US's version of Bunnings, 77%, and the list goes on and on. Disney, 56%. Every one of those businesses, maybe bar one, I would say everyone here in this conference room tonight would know these businesses well. Flight Centre, 68%, Macquarie, 92%, but your managed fund, your super fund, and the money that you give to someone else to invest for you, they wouldn't have Apple. They wouldn't own Costco. They wouldn't own Disney. They wouldn't own Amazon. They wouldn't own Berkshire Hathaway. They'd own BHP. They'd own Woodside. They'd own Insurance Australia. They'd own Coles, and they'd own Wesfarmers, and they'd own Aussie businesses. And many of these businesses are great businesses, but they're not great investments. I want you to write something down right now. I want you to write down great business versus great investment. Because what I'm going to share with you tonight is how to make a great investment in a great business. And there's a big difference between the two. Now, businesses that we've sold from our portfolio and we don't currently own since we started our portfolio with our clients last year. And incidentally, that's when we started Trading Mastery, so just so as you know. Tesla 190%, Afterpay 91%, Goldman Sachs 55%, American Express 45%. Again, all household names. We're not talking about investing in penny dreadfuls. We're not talking investing in businesses that don't earn and make a sizable sum of money and have been doing so for decades. So America has been the number one trade in financial markets for more than 100 years. So my message is very simple. If you pigeonhole your money here in Australia, you're really disadvantaging yourself big time with respect to an opportunity of making extraordinary gains, stable gains, gains that don't come with a lot of risk, gains that will be able to continue to improve over time, versus investing in Australia in many small cap businesses, mid cap businesses that have no global growth potential, that just spin their wheels. They might pay a 2 or 3% dividend, but the share price never goes anywhere. And what you need is share price appreciation. Dividends are wonderful. Don't get me wrong. Most of the companies we own pay a dividend, but most of the companies we own have gone up 400, 500, 1,000% in the last 10 years, when many of the businesses in most Australian super funds and managed funds have barely moved, have really gone, because the industry that manages all that money is doing so in a way that benefits them and not the end investor. So there is a lot more money to be made investing globally than just investing in Australia. We're talking about 26 million people versus a global population of 7.8 billion. So the odds of you making more money investing in quality global growth businesses listed on the New York Stock Exchange and NASDAQ is just so much higher. That is an absolute fact. So let's take advantage of it. You know, the US S&P 500 in the last 11 years, since 2010 to 2021, has risen 300%. 300%. That's the collective group of 500 companies on average in the United States listed in the US. The same comparable index, the ASX 200 in Australia, has only risen 130% over that same period of time. Significantly underperformed. And there's absolutely no reason why you as an investor cannot expose your money to these amazing businesses that will continue to dominate. You know, we own businesses in our portfolio. They've already won. They already dominate their industries. They already make tens of billions of dollars of profit every quarter. Not every year, every quarter. And businesses that you use every day on your computer, on your phone, the software systems, the websites you visit. So that at the end of the day, I want to share with you how to expose your money to those businesses. But right now is such an important time, because we are going to beat this pandemic, guys, in the next 6 months. There is enough tools in medical toolboxes right now. With the new Pfizer pill last Friday, if you haven't caught up on it, do a Google research tonight. There is a new pill from Pfizer that has been proven to reduce hospitalization and deaths by 89%. We've got better vaccines. We've got better treatments. All these things are going to see, and I'm not exaggerating when I say this, we are going to see an economic expansion in the next 12 months the world has not seen since the end of the Second World War. Because we have not seen a pandemic of anything like this in more than 100 years. And there are going to be businesses and industries that are going to absolutely thrive in transport, in infrastructure, in banks who raise interest rates and make more money. We're up 100% on our Macquarie Bank investment in the last 12 months. 100%. Because it's a global growth business that has more than 70% of its revenue coming from overseas today. It dwarfs all of the other 4 big banks in Australia. Travel and leisure businesses, we're up over 65% on our Flight Centre position. Expedia, bookings.com, Live Nation just last week came out and said their bookings and their revenue now is exceeding 2019 levels before the pandemic. Retail, tech and e-commerce businesses, people that have been shopping online on Amazon and using more online services through the pandemic, that's not going to change. That's only going to get stronger and stronger. As technology gets better and better, we're going to use more of it. Anyone who says, oh, technology will take a backseat in the next few years, incorrect. It will actually be more prevalent as we go forward. And here's a really fascinating but really powerful fact right now. And I want you to write what I'm going to share with you right down, because it is factual, it is going to happen, and you've got to participate in it. If you don't, you'll end up sitting on the sidelines and watching everybody else make an extraordinary amount of money, as my clients and myself will here at Trading Mastery. Let me share it with you now. Population growth around the world has explained every bull market cycle since 1900. Every market top, every time the share market has reached a high, and then we've had a correction of between 30 and 50%, has coincided with a generational peak. So there was a generational peak in 1930 when they had the Spanish flu and the Great Depression. There was another generational peak in 1974. The baby boomers peaked in 2000. Gen X peaked in 2018. So what's my point? The 30 to 50-year-old age bracket drives the global economy. When you're between 30 and 50 is when you're spending most of your money. When you're over 50, you're spending less. And over 50 right now, between 40 and 50 and around my age, around 50, we're the millennials. And we are going to inherit millions and millions of dollars in the next 30 or 40 years. And we've also been opening investment accounts for the first time in the last 12 to 18 months. So in the next 20 years, what we're going to see is we're going to see a wealth transfer from the baby boomers to the millennials of somewhere around the vicinity of $30 trillion. So in other words, the baby boomers will pass on, and they will leave their inheritance, their assets to the next gene pool, which is the millennials. And that is going to be around $30 trillion. Where is that money going to go? Well, the millennials are already investing right now. The millennials have already got a taste for the share market. Millions of investment accounts have been opened during the pandemic. That's probably the reason why you may be here tonight. So therefore, the money that is going to be coming into the stock market in the next 20 years is going to dwarf anything that we have ever seen in the last 100 years. This is absolute fact, guys. It's not maybe it might happen. It's going to happen because we all pass on at some point. And the baby boomers will pass that money on to the next generation, and that next generation will invest that money. A vast portion of it will get invested in the share market. And right now, interest rates are zero. Interest rates are likely going to stay below 3 or 4% for the next 10 years. And when you take in consideration inflation at 2.5%, anything put in the bank for an interest-bearing deposit, any bonds right now, when you take in consideration what fixed income is worth, it's zero. So forget leaving your money in the bank, forget buying government bonds, forget thinking that that's going to be a return, because right now it's negative. The money flow into the stock market in the next 20 years is going to be enormous. And all you have to do is know which businesses to own. All you have to do is know which ones are the big, powerful, predictable earnings winners, and that's what I'm going to show you. As a client, we know what companies to buy. We know when to buy them. We know how to balance a portfolio correctly. You know, it's one thing tonight to say, okay, well, Apple and Costco and Flight Centre and Macquarie Bank and all of these wonderful businesses, maybe I just should buy some. That's not the answer. You've got to understand when to buy them, how many to buy for the money that you have. What is your investment runway? What is your objective financially? How do you balance a portfolio correctly? And I've been very fortunate to learn from investment bank and hedge fund traders how to do that successfully, the ones that make the lion's share of the money in markets, not a managed fund. I mean, a managed fund has over 100 stocks in it, and they turn that portfolio over every year about 100%. They don't make anything meaningful. I'm going to share with you how to own a concentrated number of businesses and know what the right time is to buy, trim, sell, and manage a portfolio properly. And to avoid buying companies that underperform, that are going to give you financial pain and a headache and heartache. Because it's not about investing in businesses that are penny dreadfuls or startups or, they're hopefuls and in many cases hopeless. You want to own big, powerful, predictable, global growth winners. That's where your money is going to come from. And what I do here at Trading Mastery is show you how to lower the risk, owning high growth businesses that deliver high returns on capital, that have extremely strong balance sheets. And I provide my portfolio to every client every single day. In fact, I share with you specifically when I'm buying and selling. There's the last text alert that I sent my clients just a few days ago. So I put it in an email to them. I put them in my daily report. I put it in my daily video, and I send an alert to your mobile phone. I mean, it can't be any simpler than that. I lay the groundwork. I do all the heavy lifting, and I spoon feed it to you exactly what to do. You're not going to get that from a financial planner, because the financial planner or managed fund person doesn't even own the businesses in the portfolio privately. I'm going to share with you exactly what I own. That's why our clients love investing alongside us, because there's no hiding behind the curtain. I provide a report every day. I share with you what the major themes are driving markets. I tell you exactly what is going on, black and white. No financial entertainment. If you're listening to or watching Terry McCrann or David Koch, or you're listening to Alan Kohler, I'm sure they're lovely guys, but that's financial entertainment. You want to listen to people who actually invest money and actually make a lot of money, not someone who's paid to have an opinion. Never listen to anyone who's paid to have an opinion. Someone like an analyst or an economist. Listen to someone who makes a lot of money doing exactly what we're talking about tonight. So what does Trading Mastery do? Number one, we help you make money. Number two, we help you save a lot of money to avoid the financial pain and a lot of time and effort that you will spend on your own investing in businesses that won't go anywhere. I want to share with you how to own companies that have the potential to make you a lot of money over the next 3, 5, 10 years. And it won't be businesses here in Australia. There will be a handful that will do well, a handful. But the vast majority will just struggle along because they don't have high returns on capital. They don't have global growth potential. Great businesses like Apple and Microsoft and Costco and all of these amazing companies, the management, the CEOs of these businesses, Tim Cook, Ted Weschler, the people that Jeff Bezos, they're not running Aussie businesses, with due respect. And I don't mean to be un-Australian, but this is about making high returns on investment. It's not about being parochial. It's about securing a brighter financial future. Now, there's an investment account on the screen of a client in the first 12 months with us, up over 40%, over $50,000. Now, I want you to stop for a moment. In fact, I want you to type into the Q&A box, just a yes or a no. Would an additional $50,000 or a $90,000 for a second client here, up over 70% in their first 12 months, would 50,000 or 90,000 mean something to you if that was passive income and make a difference in your life? Yes or no? Because if you're typing in no, then I'm not the guy for you. Trading Master is not for you. But anyone who types in yes, then these people that you're learning about tonight, these people on the screen that are given 5-star reviews on Google, on the videos, the statements that I'm showing you tonight, they started exactly where you are right now in one of these presentations. And they just simply took the next step. And there's never been a more important time to have someone experienced showing you exactly how to do it in a very transparent manner than right now. Because the opportunity in the next 12 months, 2 years is going to be enormous. And the average Australian that is not doing it with someone like me, and I can tell you, I don't know of anybody else around that does it like we do it. There may be one or two, but I haven't met them yet. If you try to do it on your own, the probability is that you won't do very well. So why listen to me? Well, I've been doing this very successfully for 21 years. I've been given awards at the London Stock Exchange from World Finance for what I do. I've been invited by Fox Australia to host my own television program on Sky News Business Channel for 4 years called Money Exchange. It was the #1 live program on the channel on a Friday. I've stood in the trading pits of the S&P 500 through the global financial crisis period of 2008. I've coached at schools, universities, and I love doing what I do today because I can give back and share with people like you how to do this successfully. I live in Noosa Heads. I think it's a beautiful part of the world. That's my dream, to live here, and I've been here for 15 years now. It's not everyone's cup of tea, but I'm just like everybody else. I've got a wife and kids, my wife Janine, my 3 kids, Lewis, Abby and Jack, and I left a professional sporting career in my late 20s, desperately needing to find a new career because I broke my femur at a Pro Tour event in Florida. That was me actually at the Moomba Masters in Melbourne. Those of you who live in Victoria will know Moomba well. And I made a transition successfully into the financial markets because I hired the right people. I knocked on enough doors to find people that used to work at Goldman Sachs, JP Morgan, BNP Paribas, and over a 2-year period, I spent over $500,000 hiring former investment bank and hedge fund traders to share with me the strategies and techniques to make a lot of money. And yes, it was a big upfront investment to start with, but it's paid multiple fold since then. And that's the reason why that we are so successful. Because I'm not going to teach you a set of charts and just say, the squiggly line will tell you whether the price is going to go up or not. What I learned from working with investment bank and hedge fund traders is how to ride the coattails of smart money, how to invest in global growth businesses that have the potential to continue to grow their earnings. And I want you to write something else down right now. Share prices follow company earnings. The more money a company makes, the higher the share price will go. End of story. If a company isn't making money and more money and more money and compounding those returns, the share price will go nowhere. And that's a very key part of successful investing, knowing which businesses are great investments and great businesses. How to manage risk if something goes the other way. How to apportion the portfolio correctly so you don't have too much money in one company. How to have conviction. Kevin Malval, he started here with us in September, invested $15,000, and right now he's got $40,000. A client here statement over $52,000 of profit inside 12 months. A client statement with $60,000 of passive income. Passive income. I'm not talking about a couple of thousand here, guys. We have clients, as you'll learn more about tonight, that are in the hundreds of thousands. One client from WA in the last 12 months made just over $1 million. 37% return on investment compared to 9.95% on the ASX. So what is the difference between a successful investor and an average investor? Well, here's what the average investor does. They sell when markets go down, and they only buy when markets go up. I want you to write that down. Average investors sell when markets go down. Successful investors make money when markets go down. Successful investors own a concentrated number of high quality businesses, and they accumulate them, and they continue to buy them when markets are cheap. The average investor only buys when market goes up. And that's the reason why they never make money. Because they're chasing, they've got this FOMO, the fear of missing out. So let's chase the price higher. I'm going to show you how to own businesses and buy them at the right time when they're cheap. And as time goes on, the concentrated number of companies we own continue to buy more shares in those businesses as time goes on. But if you give your money to a financial planner, maybe it might be $10,000, and you might be lucky to get 9% a year. And if you were lucky enough to get 9% a year, for the next 20 years, that amount of money would compound to 56,000. 10,000 to 56 in 20 years. That is not meaningful. But if you were able to get a 20% return on investment over the 20 years per year, annualized, that would equate to 580% more, or $383,000. But the question is, can it be done? Is it being done? And the answer is yes and yes. You know, Prue here is one of our clients at Trading Mastery. She's a friend of my wife and I. She lives here in Noosa, and we only met her after she joined Trading Mastery. And she sent me this email on the 6th of April this year. I broke the $200,000 mark for profits in the 9 months since I've been trading with you. Got to say, I'm thrilled with that. Guys, it's now November, and the S&P 500 is up about 15% since then. So add another 15% or more on top of that. This can be you. These clients and these statements and the returns on investment, these are not fictitious people. They're people exactly like you. Does this sound like a fair deal? Work to 70, retire in a pension, spend the golden years of your life worrying about money. I hate to say it, but the average Australian doesn't live beyond 79, 80. How about we get retired at 60, 65? How about we actually get meaningful returns on investment, such as $82,000 and compounding money over the next 5, 10, 15, 20 years, so as you can do all of the things in retirement that you want to do? Type me into the Q&A, into the chat box. I'd be really keen to know, what is it that you want to achieve by being here tonight? Is it to retire earlier? Is it to just get a better return on investment? Is it to sack your boss and have a career as an investment trader? What is it? Because if we don't start to tick off these things and understand what it is, then it's very difficult to achieve it. It doesn't happen. Trading Mastery, we are not a broker. We're not financial planners. We're not fund managers. We're not speculators. We own exceptional businesses. And that's why we win. End of story. That's why we win. Because we do the opposite to the average person. And as David Stack says, honest, transparent, educator, mentor, and motivator. Yes, I want to mentor you and motivate you, but I want to show you how to make money from doing it the right way. And I don't assume anything. I assume everybody in this conference room tonight is starting from zero. I know some of you are not. You've invested before, and that's fine. But you know, Warren Buffett is 92. He's one of the richest men in the world, and he really didn't get rich until he was in his 60s and 70s. And he's managed to compound money at extraordinary rates ever since he was about 60 or 70. And he started young, yes, but it's never too old to get started. The time's going to pass anyway, guys. You know, if you're in your 60s or 70s and say, oh, I'm wondering whether this is actually really right for me. Well, guess what? It is right for you, because let's make a difference. Let's not just let the time pass and go, well, you know, everybody else is going to enjoy it. So my principles of success, our principles of success here at Trading Mastery, is knowing how to value businesses, buying them at a discount, knowing how to reduce risk, and applying the right temperament. A little bit of delayed gratification instead of the instant I want it now that everybody seems to have today. And here at Trading Mastery, I'm going to share with you right now 3 of the key investment process principles that we have. We don't have time to go through the 8 tonight. I want to teach you 3. Okay, so you might want to write these down. These are 3 of the top 8 investment principles we have. Number 1, is the business a great business or a great investment, or both? I'm going to share with you shortly some great businesses that are not great investments. You see, there's a big difference. And if you're going to make money as an investor and meaningful returns on investment, I'm going to have you own great businesses that are also great investments. Because there are lots of great businesses out there that are terrible investments. And how to understand how to search for them, find them, and own them. Because when you invest in the share market, we are buying little pieces of companies. We are genuine shareholders of businesses. Another one of the investment principles we have here at Trading Mastery is, what is the company's durable competitive advantage? What makes this business unique? Why are competitors going to find it so difficult to compete against this company? Why is this company likely going to grow their moat, their economic moat, bigger and bigger and bigger in the next 5 or 10 years? Why is it that some businesses are really easy to compete against and others are very, very difficult? That's a really key element of choosing a business to own. A great investment, a great company, but something that has a competitive advantage. Another investment principle is, what does the balance sheet of the business and the income statement show about the company? Now, I would say 98% of people that invest in the share market, novice investors and mum and dad investors around the world, never look at an income statement of a company, never look at the balance sheet, never looks at the assets, the liabilities, never look at the cash flow, never look at the financials of the business. They wouldn't have any idea. And this is a critical part of successful investing and making high returns, understanding the financials of a company and valuing what are the earnings going to be in the future. And if you can't do that, then the probability is you're not going to make money in the market. And this is one of the biggest mistakes people make. They buy companies and they buy shares in businesses because they just think the price is going to go up. I teach my clients to forget about the share price, focus on the business, focus on what the business is doing. So let's assume you bought Berkshire Hathaway in the year 2010, Warren Buffett's business. Berkshire Hathaway is the most successful conglomerate in the world with $950 billion of assets, 239 billion share portfolio, and the balance in companies like Dairy Queen, Duracell, Shaw Carpets, Clayton Homes, Fruit of the Loom, Geico Insurance, General RE. Is Berkshire Hathaway a great business and a great investment? Absolutely it is. And I'm going to share with you in a moment why. What makes Berkshire Hathaway so special? Berkshire Hathaway is a business that has been growing and compounding returns for more than 50 years. Its average share price gain every year for the last 50 years has been twice the average ASX 200 return. It's been over 20%. No business in the world has ever achieved what Warren Buffett and his company has achieved. And what is the earnings potential of Berkshire Hathaway? What's the financials like of this business? Well, did you know Berkshire Hathaway every 3 months generates $6 billion of cash? Free cash flow, $6 billion. It has $149 billion in cash right now. And Berkshire Hathaway's share price from 2010 to 2021 has risen 275%. That's three and a bit times the average best super fund performance over the same period. And I've owned it. Our clients have owned it. And you can own it as well if you understand these key principles and how to value these businesses and buy them at the right time. That's the share price gain over the last 10 years. A great business, but an even better investment. But a business like Insurance Australia, a great business in most of your super funds, managed funds, portfolios, a great business, but a terrible investment. Look at the share price over the last 10 years. It's gone nowhere. It's gone up, it's gone down, it's gone sideways, it's gone nowhere. This is typical of many businesses that are in super funds and managed funds, and many people in Australia get sucked into owning. But what about Amazon? What about if you had bought Amazon 10 years ago? Is Amazon a great business and a great investment? Absolutely it is. It's one of the greatest businesses and greatest investments of all time. What makes Amazon so unique? What's Amazon's competitive advantage? Well, ask anybody around the world, what is the number one e-commerce website in the world? They're going to say Amazon. The business that today is growing, not only its e-commerce business, but it's its cloud business at somewhere between 20 and 30% annually, which is just extraordinary. The earnings potential for Amazon over the course of the next 5, 10, 15, 20 years is likely going to be somewhere between 15 to 20% per annum, which is extraordinary. And Amazon's share price from 2010 to 2021, while we've owned it, has gone up 2,750%. There it is right there. And your managed fund or super fund, unfortunately, wouldn't have owned it. Woodside, a petroleum business, very popular here in Australia. A lot of people invest in it. Great company, terrible investment. It's gone nowhere. And to emphasize the point that I want to make here is that when you look at Commonwealth Bank, BHP, Harvey Norman, Telstra, Insurance Australia, Woolworths, look at the returns on investment over a 10-year period. The last 10 years versus Apple, Amazon, Google, Microsoft, Facebook, Netflix. I rest my case. That's the absolute fact of the returns, guys. Global growth businesses. So every decision we follow has to have the 8-step process that has to be logical, understandable, repeatable. I do all the heavy lifting for you. I will teach you the entire process, and you can piggyback my every move. Every time I buy and sell a company, I tell you exactly what I'm doing. I share with you the process So it's logical, understandable, repeatable. And there are the companies right there. You can have this portfolio and own it. And I'll share with you over time how to build something that can deliver you everything you've always looked for. Specific strategies for making meaningful returns, saving a fortune over time, valuable time and effort. Time is money, guys. And when you invest alongside and myself and my team, you're going to be saving a huge amount of time and effort. Proven strategies to avoid financial pain. So what I'd like to do right now is outline how we're going to get it to you. Outline what we do. And tonight I'm looking to take on board in the month of November 8 clients from tonight. We only work with 30 clients a month, 30 new clients a month. And I would like to open the door tonight for 8 new clients to come on board with us to make 2022 and the years ahead your best financial years ever. Just like Jeanette and just like all of the other people that I've shared with you tonight. Our program, when it first starts out, we put you into our VIP walkthrough series that shares with you how to set everything up correctly. The account structure, the right name for tax purposes, how to make sure you understand the content that's going to be shared with you, how to read the text alert, how to read the daily reports, how to watch my videos every day. Then we have an incredible knowledge center that you can access 24 hours a day that shares with you the content of how we build the portfolio, how you're going to build your portfolio, which companies you're going to end up owning, how many shares you're going to own, the potential length of time you're going to own those businesses for, and how to do things professionally. Every day I'm going to send you a written report and a video called the Daily Market Update that's going to be in your inbox around 9:30 every morning. Every Wednesday and every Friday, I'm going to invite you into a live conference room and I'm going to do some live training with all of our clients. I do it every week on a Wednesday and a Friday. You can ask me whatever you want. And we do a company profile and we do a full due diligence report of 45 minutes on a company every single week. We go deep into the financials, the CEO of the business, the management of the business, the economic moat, and the key things of how professional investors make decisions to buy great quality companies that are not only good businesses, that are great investments. Every order sent to your mobile phone, in your inbox, maybe 2 or 3 times a month, you'll be spending 5 minutes buying or selling something in your portfolio. We're not talking about doing anything more than about 10 minutes of work each day. Read my report. That's the amount of work that's involved. Do that over a cup of coffee in the morning, in the afternoon. Attend the live training. It's all recorded for you, cataloged in the Knowledge Center for you to watch in your own time. And as Stefan Usmana says, you receive an alert to what Andrew is personally buying. I'm currently up 35%. I mean, it's that simple. We have an annual Trading Mastery conference every year, face-to-face. Our next one is in July of 2022 in Sydney, 2 days. David Skillen is our chairman of our business, used to be the chief operating officer of Barclays Bank in London. The quality of people that you will associate with in this company is extraordinary. Jody Shine says, you know, as a first-time trader, this was a huge decision financially and mentally to join Trading Mastery, but it's been the best decision I've ever made. Gareth Hogworth says, I'm a massive skeptic and trust almost no one, but been with you for nearly a year now and 10 out of 10 rating from me. The best financial move I've ever made was to join Trading Mastery, from Mike Wharton. So guys, we can either sit on the fence and watch it all unfold in the next 2-3 years, or we can take action right now tonight and take the right step with the right people to give you the confidence, the conviction that you know what you're going to be doing, how to do it successfully to make the years ahead your best financial years ever. Because that's the bottom line. We can either make them the best financial years you ever, or we can just continue to do what you're doing now. So I'd like to invite 8 of you to come with me from tonight on a first come, first serve basis. We'll fill the membership from tonight. And here's what you're going to receive. a VIP walkthrough series, access to our knowledge center, daily market report and profile updates, Wednesday and Friday live online trainings, portfolio buy and sell orders sent to your mobile phone and in the report, an annual 2-day conference, daily phone, email, and live support. And there is no expiry on the membership. 0. So Trading Mastery, we have an option 1 and option 2 with respect to the investment in our program. And I'd like to walk that through with you tonight. Mark is going to put a link into the chat to option 1 or option 2. Now, the reason why I'm going to put the link in the chat tonight is because the 8 places, guys, I can tell you, will go like that. They do every single time we have one of these sessions. They will be filled by Wednesday. So option number 1 is a $19.97 upfront payment and then 4 payments of $9.97. And there is a small $49 a month fee that covers all of the live training, all of the daily emails, the videos, the text alerts, the live support, the phone service, everything you receive, your 2-day conference, ongoing, okay, for as long as you want it. Or option number 2, you can save yourself $988, and it's just simply a once-off investment of $4,997, and then there is that small $49 a month investment to cover all of the ongoing training, the daily alerts, and everything that I've just shared with you. So what we're going to do from tonight is, for those 8 folks coming on board from tonight, for the first 3 months, we're going to waive that $49. So you'll get that as a bonus, those of you coming on board tonight. In the next 24 to 48 hours, you'll receive your official welcome call from Janine, from our admin team. You will have your daily reports, access to the Knowledge Center, inside the VIP walkthrough in the next 24 to 48 hours. You'll be available to come to our Wednesday live training if you would like to on Wednesday. And by the end of this month, you will have learnt enough to be ready to open your account and start to invest in your first positions. And I want to achieve all of that in the next 30 days to ensure that we can get everything set up to make 2022 the best year we can possibly make it, to make sure we capture the returns on investment that are going to happen in the industries and the businesses that I talked about tonight, because it will happen. The pandemic will come to an end, and the industries and companies that we are investing in will thrive. And I want you to be part of it. So that opportunity is there for just 8 from tonight. So the links are there in the chat. You can grab them. You can start to fill out the membership application. And if for some reason you need to make a bank deposit, etc., make sure you let us know in the chat tonight. But make sure you click on that link, and let's make sure we make every post a winner. Now, what I'd like to do now is answer a few questions that you may have. I know Mark has been answering lots of questions throughout the course of the last hour. I'll answer a few common questions right now that we always get, but go ahead and ask me a question if you've got one in the chat. We'll answer some questions for the next few minutes. The first question I always get asked is, how much do I need to invest in my account before I start buying some shares? Or how much is the right amount to put in my account to start off with? There is no specific right amount. We have clients start out with a few $1,000s. We have some clients start out with hundreds of thousands of dollars. It all depends on your personal financial situation. Whether you've got $1 million or $1,000, it makes no difference to me. What you will be owning is great quality businesses. End of story. And we will show you how to do that correctly. This next question I get asked is, can I pay for the membership in my self-managed super fund? The answer is yes. And you can then have multiple accounts, your personal name, your family trust, or your self-managed super. You can have as many investment accounts as you like. If you need a broker and you have never invested before, you can use my broker. You're more than welcome to do that. I share all of that in the Knowledge Center, links, how to open the account. I give you my personal account manager who will actually look after you and hold your hand. But if you've already got a broker, you've got an investment manager, you're investing already, you don't need to use the one I use. You use whoever you like. That's not my business. But there are a lot of folks here tonight that have never invested before. They want some hand holding. They want to have their account somewhere that it's going to get looked after. Their money's safe and secure. It's in Australia. They're going to get great brokerage rates. All of those wonderful things that I get, you're going to get them as well. Okay. But if you already have an account, you already got a broker, use them already. If you've got one, absolutely fine. Not my business. Okay. If you would like to have someone else in your household, now, I know some of you are watching this tonight with a spouse, a partner, husband, wife, girlfriend, boyfriend. There is only one membership per immediate family. Anyone under your household, they can be part of the program, the conferences, everything. You get 2 tickets, and therefore there's no need for 2 memberships. There's just one membership. So that's a great advantage for those of you. So let's get to some of your questions now and what's on your mind. Can I use Comsec for trade? Yes, you can. If you want to use Comsec, absolutely fine. They are on the more expensive end on brokerage. For example, most of our clients pay about $4 with a broker that I use. But you can use whatever broker you like. Do I need to read charts on a daily basis, or do I provide? We do not do any daily charting analysis, Sally. Charting analysis does not make prices of shares go higher. What makes a share price go higher of a company is the earnings of the business. I'm going to show you how to read a chart, but that's it. I'm not going to be sitting there wasting your time. Charting technical analysis when it comes to companies listed on the share market is completely irrelevant at the end of the day, because the share price of Apple and Alphabet and whatever business we're looking to buy, it's not going to go up because some squiggly line on a chart. And anyone who tells you it does is not an investor and doesn't make money professionally, doesn't make meaningful returns. There has been a big recovery to date. When do you think these strong gains will level off? Well, Tracy, it's a very good question. A lot of people have been talking about how much longer can the share market continue to go higher. I'll just tell you this from my experience. Share prices follow earnings. Share prices go lower when there is fear, and there is no fear. Right now, there is a record amount of money sitting on the sidelines waiting to come into financial markets. Americans, Australians have never been richer. The global economy is right now running at 4.5% to 5%. Inflation is between 3% and 4%. The global economy has never been as strong as it is today since the end of the Second World War. Now, are we going to see a pullback at some point in 2022, 2023, or 2024? It's inevitable. It will always happen at some point. But when it does, we'll buy more shares in the businesses we own. But anybody who's saying to you, the share market's going to go down in the next 6 weeks or 8 weeks, well, tell me why. COVID virus right now is being beaten. Unemployment rates around the world are going down. Growth rates are going up. Economic output is going up. Oil prices are going higher because of the economic surge. Consumer and business confidence is soaring. And company earnings, the most important thing, company earnings of businesses on the S&P 500, 84% of them in the third quarter earnings season have beaten estimates. So, it will happen at some point. Okay. Are buy and sell orders done through a third party? Nicole, you're going to need to have a broker, and that can be the same broker as me if you want. You can call them a third party if you like. And you have an account with them. Your money is deposited with them. You have an electronic platform on your computer, which you learn about all through the Knowledge Center, and we show you how to use that. And you place your orders that way. You do not place any orders on a live account without practicing a multiple number of times. There's a lot of hand holding with that respect. So yes, there is the requirement that you're going to need to have a broker. That's the way that you place the positions and buy the stocks that we want to own. Sorry, I'm just reading a few. Is this fee tax deductible? The answer is yes, it is tax deductible against any investment profits that you make. Okay, so any investment profits you make, it's tax deductible against those profits. Okay. We are not short-term speculators, right? Every position we take is a trade, is a position in the market, but we are not speculators. So don't expect that if you're someone who's looking for a day trading system or, to get in and out of the market in 5-10 minutes, that is not what we do. And in fact, if that's what you want to try and do, then the probability is you're going to lose all your money. Now, I say that not to be smart. Guys, I run an FX trading desk for a very large Singapore family for many years. I've been a broker. I understand what happens in derivatives markets, and people who buy and sell things quickly, they lose all their money. All right, just do the research, look up how many people lose money in markets like FX, Bitcoin, gold, silver, commodities. And I can tell you from my experience as working in a broking business that 100% virtually of those people lose money. And you've seen the types of money that can be made in doing the simple things that we do here, and that is own dollar producing assets. So you want to know what's the difference between what we do to what everybody else is doing? We own dollar producing assets. We own companies. And some people say, well, why is investing in the share market so much better than perhaps investing in real estate? I'm not going to say to you real estate isn't a wonderful investment, because the home that I'm sitting in here in Noosa with a back door onto the beach has been one of the best investments that I've made. But when you're dealing in the share market, there's no leverage to have to worry about. There's no bank to have to deal with. There's no tenants. There's no mortgage. There's no real estate agents. There's no upkeep. There's no landscaping. There's none of those things. Once you invest, you sit on your backside and do nothing. Just read my report, follow what I do, and it's extremely simple. People think that making money in the share market has to be complicated and sexy. I will exceed your expectations on every front, on how simple the process is, how straightforward the way we do things, how logical it is, how transparent it is, and the returns on investment that you will make over time. Okay. All right. Now, there is a good chance, I just got a note from Mark, there's a good chance that most of those 8 spots will be taken in the next hour or two. If for some reason you had a problem with the link and it didn't work for you tonight and you would like to take one of the spots, you got to tell us right now in the chat, guys, because tomorrow morning, when Mark, Zane, and myself jump on the phones and start contacting those folks that would like to come on board, we're going to contact everyone that has actually said yes first. So, and then of course, if you've asked a question, we haven't been able to answer it, we are going to get to you and we're going to answer everyone's questions. We're going to come back to you and do the very best we can, but we want to make sure we get those spots filled so as we can get you into the program for this week and we can get started right now. All right. I hope you enjoyed tonight, guys. I very much appreciate your time. I know I've got over a little bit of time. I said it would be 50 minutes to an hour, and I've gone a little bit longer than that. I apologize for that. I hope you learned something. I hope you enjoyed spending an hour with me. If you are coming on board into our program, I cannot wait to welcome you into the program. Let's make sure we make every post a winner. You're going to love it. And I look forward to meeting you in our next live training. Thanks, everybody. Bye for now.